Peloton just released its quarterly earnings report, and it was the 13th consecutive report of losses.
Wish we could turn back time to the good old days when the mama sang us to sleep, but now we're stressed out.
Peloton stock chart during the pandemic lockdowns would actually make for a half-decent cycling intensity program if you think about it. But the last 18 months would look like an extended rest period. The stock has lost 98% of its value since its all-time highs and looks dead. But this is a great learning opportunity for investors. We can use Peloton's story over the last few years for at least 4 different examples of why trading individual stocks, particularly growth stocks, is so hard. Number 1, high growth stocks with head-turning performance in the short term can play with our emotions. We can be tempted to buy high-flying stocks simply because the performance has been good. 2, once you've bought a stock and then it begins to decline, it's hard to know when to get out. 3, trying to take advantage of a growth stock that has fallen in price might backfire because it keeps on falling. And 4, short selling because you think a company is toast can burn you, as we are seeing with Peloton right now because of buyout rumors that have pushed the stock up markedly in the last week, causing people who shorted it recently to lose their shirts. Okay, so let's start with the first lesson. Let's look at Peloton during its darling phase. If we go back to the beginning of the pandemic and the lockdowns, people were cooped up at home and we were stir crazy and we couldn't go to our gyms. The timing was perfect for these high-end connected fitness exercise bikes to grip our imagination about a brave new world of cycling in one place. And they're not cheap. $1,445 for the standard bike and almost $2,500 for the Bike Plus. And then a $44 per month subscription in perpetuity to access live classes. Peloton was a unique way for people to connect and be motivated around working out, especially when gyms were shut down. Plus, for some people, they had extra cash because they couldn't spend their money anywhere else, even if they tried to during the lockdowns. It was a perfect storm. Peloton's stock price reached an all-time high in January 2021 of $167.42 per share, which put the market cap of the company at $49.3 billion. And if we look at the volume of shares traded, we can see a lot of interest on the run up from $75 a share to $100 per share. A lot of people started piling into the stock after a tremendous run up in share price and promising quarterly earnings. And it was easy to find opinions that confirmed the bull case even from these lofty levels. Take this piece in The Motley Fool, published in November 2020 when Peloton's PE ratio was almost 400. The title of that piece was Why Peloton Stock Isn't as Outrageously Pricey as It Might Seem. As it turned out, Peloton stock was as outrageously pricey as it seemed. The perfect storm ended. The world opened up. Gyms opened up. Inflation increased. Interest rates went up. People became more pinched financially. Not only that, but bizarrely, and spoiler alert for any fans of Sex and the City, although I imagine the overlap of fans of this channel and Sex and the City are pretty low, Mr. Big from Sex and the City died from a heart attack on a Peloton workout. And if that wasn't bad enough, Wags from Showtime's Billions had a heart attack, I think like 1 month later in a scene from that show. Now, he didn't die, but nonetheless, maybe it was signifying that the party was over for Peloton. Now, with the benefit of perfect hindsight, this run-up was based on FOMO and speculation. FOMO of, the fear of missing out on potential future strong gains as the stock was marching up. And this was also partly fueled by the speculation that consumer behavior had permanently changed during what was a temporary perfect storm. To maintain the very high price and then to see continued strong gains meant that people thought that a lot more people were going to get $2,500 stationary bikes and pay monthly to access live classes in perpetuity than the market had already priced in at that point. Because stock prices are effectively baking in the collective expectations of growth from millions of investors. The valuation had become detached from reason. And this high-flying price was the very thing that lured in a lot of buyers. And this is quite normal when it comes to investing. It is hard to keep your emotions in check. So that's one of the main lessons from Peloton. But let's turn to the second lesson. If we've bought a stock that was highly priced and it started to fall in price, there can be a tendency to hold on to a now losing stock for too long. This is known as the disposition effect. Investors feel the pain of a loss more intensely than the happiness of a gain, so they're often going to cling to a losing stock, hoping that it will rebound, and to also avoid locking in that loss and making it a real loss. They may tell themselves things like, oh, it's just a temporary dip, or I'll sell it when it gets back to the price I bought it at. But if the stock continues to fall, because quite frankly, a stock does not care what price you bought it at, investors can find themselves sitting on even bigger losses. And this just magnifies all these emotions. Now, on the flip side, for people who didn't hold it near its peak, but saw the declines as potential buying opportunities, here's another learning opportunity. Some investors try to what's called catch a falling knife by buying a stock as its price drops, thinking that they're getting a bargain. They may, in fact, average down their purchase price, but if the stock keeps on falling, they're just putting more money into a losing investment. It's like trying to catch a real knife. It's easy to get hurt. The fourth lesson is about the risk of shorting a stock. There are about 50 million shares shorted right now, and the rumor of Peloton being taken private has caused the shares to jump from their recent lows. And when you are shorting a stock, meaning that you are betting on it going down, a jump in the stock price like this can really burn you. So let's take a look at an example of how this would work. Now, first of all, certainly some people had shorted Peloton since before the latest earnings call and are likely up in their positions. But some people initiated shorts at $3.50 a share. And if they shorted 1,000 shares, they would have borrowed those 1,000 shares from their brokerage in order to sell them short. They would have received $3.50 times 1,000 shares by selling them, which would give them $3,500 in cash from the sale. After the buyout rumors surfaced, the shares increased in value because in order for a buyer to take a company private, they would have to price their offer high enough to get shareholder approval of the deal. And that generally means that an offer would carry a significant premium to the current market price. So let's just say, for argument's sake, that number is $10 per share. I have no idea. It's just a rumor at this point. I have no idea if they're going private, if someone is interested, or if a deal goes through. But if the shareholders liked this hypothetical deal, this means that all outstanding shares of Peloton would be purchased at $10 each. And our short seller would be obligated to buy back the 1,000 shares they shorted to return them to their broker. They would purchase the shares at the current market price, which would gravitate quite close to the deal price of $10 per share. So let's say it costs 10 grand, 1,000 shares times $10. To calculate the loss, we take the initial proceeds from shorting the stock and subtract the cost to buy back the shares. Remember, we're buying and selling in reverse. So we've sold first and we're buying back later, but the math is still the same. So we take the $3,500, the initial proceeds from selling the stock short, and we subtract $10,000, which was our cost to buy back the shares at the new higher price, and that gives us negative $6,500. And that represents a 185.71% loss on the initial short sale proceeds of $3,500. But when we factor in any trade commissions and the interest charged while borrowing the shares, the losses will be slightly higher. This example highlights the potential risks associated with short selling when things go wrong. Losses with short selling are theoretically unlimited, though in most cases your brokerage will likely have sold off your position if you didn't make your margin calls and so on. So there are a lot of ways in which investors can lose money trading stocks, especially growth stocks. The attraction of high potential returns draws us in, but remember, risk and return are related. The potential of high returns means that there is higher risk. Personally, I'm a fan of low maintenance, low cost investing for the long term. For my retirement portfolio, I have an investment policy statement which outlines my diversification across asset classes, the level of risk in my portfolio. It outlines my rebalancing schedule, and it predefines what I would do in various market scenarios as opposed to leaving it to me to make decisions in the moment, which would be more reactive. I prefer to be proactive so I don't have to think about it in the heat of the moment. I don't have to worry about analyzing individual companies, their earnings, or worrying about the noise in the headlines. I just use broadly diversified, exchange-traded funds. It's super low maintenance and it's evidence-based. It's one of the best ways to manage a portfolio to help take the emotions out of investing which tends to be the source of the biggest mistakes and losses. If you want to learn to be a better investor and learn more about personal finance, subscribe to my channel. Hit the like button if you like this video, and I will see you in the next video.
I wish I found some better sounds no one's ever heard. I wish I had a better voice that sang some better words. I wish I found some chords in an order that is new. I wish I didn't have to rhyme every time I sang. I was told when I get older all my fears would shrink, but now I'm insecure and I care what people think. My name's blurry facing